Money Flow Index, or MFI, is an oscillator that is very popular among traders. It shows the overbought or oversold conditions of a stock or forex pair using the price and volume. This indicator is very similar to the RSI. RSI indicator calculates its values based on the price data alone, but Money Flow Index takes both price and volume data into consideration. MFI indicator can also be used to spot divergences. On TradingView, this is what the Money Flow Index looks like. It is very similar to the RSI indicator. By default, RSI indicator comes with 30 and 70 oversold and overbought zones, but MFI indicator will come with 80 and 20 overbought and oversold zones. Furthermore, the default length will be 14. Here's what the Money Flow Index tells you. When the MFI indicator goes above the 80 level, the price is considered to be in an overbought zone. Similarly, if MFI indicator goes below the 20 level, the price is considered to be in an oversold zone. Some traders use these overbought and oversold zones as an entry signal generator. If the price goes above the 80 level, some traders will look for opportunities to sell. They will look for a candlestick pattern that indicates a short signal. Similarly, if the price goes below the 20 level, some traders will look for opportunities to buy. Again, they will look for some kind of candlestick pattern that will indicate a possible uptrend. Some traders will use other indicators that give entry signals with the Money Flow Index. Entry signal generators are indicators such as the MACD and the Ichimoku cloud. Since Money Flow Index also takes the volume into consideration, some traders use this indicator as an entry signal generator. Here's how the basic Money Flow Index strategy goes. We should look to buy when Money Flow Index is coming out of the oversold zone. Set your stop loss using the ATR indicator, or just set it below the swing low. Similarly, we should look to sell when the Money Flow Index is coming out of the overbought zone. Again, set your stop loss using the ATR indicator, or just set it above the swing high. I have already made a video on the ATR indicator. It is one of the useful indicators when it comes to price volatility and stop loss. Check out my ATR video if you want to learn how to set the stop loss properly. If you trade using Money Flow Index alone, you will get a lot of false signals, because it won't show any kind of trend direction. If you take every MFI indicator signals, you might enter a short position when the market is in a strong uptrend. Similarly, if you take all buy signals given by the Money Flow Index, you might enter trades against a strong downtrend. This problem can be solved by simply using the 200 period moving average. If price is above the 200 period moving average, we will only look to buy, and if the price is below the 200 period moving average, we will only look to sell. We will completely ignore the sell signals given by the Money Flow Index when the price is above the moving average. Similarly, we will completely ignore the buy signals if the price is below the moving average. But Money Flow Index is best used to find the overbought and oversold zones. It is not a good idea to enter trades using Money Flow Index alone. Nevertheless, I am still going to test this indicator 100 times as an entry signal generator to show you the real win rate of the Money Flow Index strategy. I will test the MFI indicator 100 times in my next video. Maybe subscribe to see it. Till then, I don't recommend using MFI as an entry signal generator. Use it with something else you know works. Another reason why Money Flow Index is so popular is because it tries to show a possible trend reversal using the divergence. If you have been trading for a while, you might have heard the word divergence. If you have never heard about it, the disagreement between the indicator and price is called divergence. In simple words, it means price is saying something else, and an indicator is indicating something else. In the MFI indicator, divergence looks something like this. Here, a Money Flow Index is moving in the opposite direction of the price. This is a signal of a potential reversal. It doesn't guarantee a reversal, but shows a possibility of a reversal. If price was going up, and you saw a divergence on the MFI indicator, you should exit your long positions, because a possible reversal can take place. Similarly, in a downtrend, if you see a divergence, you should exit your short positions, because there is a chance that price can reverse. Like I said, it won't reverse 100% of the time. Divergence may not result in a price reversal every time. Since money flow index and RSI indicator are closely related, can we say MFI is a better indicator because it takes volume into consideration as well? Well, it depends. If you just want to see oversold and overbought signals based on price data alone, use the RSI indicator. And if you believe that volume is important and want to see overbought and oversold signals based on both volume and price data, use the MFI indicator. Many traders will only use the MFI instead of RSI. Some will use both. But one is not better than the other indicator. They are both good if you use them to find oversold and overbought zones, and not as an entry signal generator. Here are some important points to note about the MFI indicator. Number 1. Since most traders will use the default MFI settings, it is better to stick to the default settings, which is 14, unless you find a setting that is more profitable. Number 2. On the money flow index indicator, the default overbought level is 80. But some traders believe that level 90 works better, because it gives less false entry signals. Similarly, some traders believe that level 10 works better than level 20 as the oversold zone. If you use these settings, you will filter some of the false signals, but you will also get fewer signals. Furthermore, the creators of this indicator also recommended using the 90 and 10 as overbought and oversold levels. Number 3. MFI divergence should not be ignored. It can indicate a possible trend reversal. Remember, I said possible. Price won't always change direction because MFI shows a divergence. We should wait for further confirmation, like a trend line breakout. Number 4. If you are a trend trader, you can use the money flow index to find the possible end of the pullback. If there is an uptrend going on and you see a pullback, wait for the MFI to come out of the oversold zone. Then you can enter a trade in the direction of the trend. That's all. Now you know how to use the money flow index indicator properly.